Everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Update for Wednesday, April 13th, 2022. Hope you're all having a great week. We had a lot of economic data released this week that we want to discuss here quickly with you today, as well as give you our updated view on the market. So let's get right to it. First, let's start with the market, the NASDAQ. Looking at the 9-month view of the NASDAQ, and we continue to chop within a range, right? This is one of these times in markets where we are working to break through what we call overhead resistance, and the market has taken a couple shots at it, has not been able to succeed yet. It doesn't mean it won't succeed in the future, but it's probably going to take another crack at it at some point over the next couple days and weeks. That key line in the sand, right? We've spoken about this. This is our 14,500 level on the NASDAQ. We tried once in February. We tried again a week later. Markets fell under the pressure, unable to break through. We came back and retested that again on March 29th, broke slightly above it, could not stay there, came back for a fourth time and just couldn't get through it. And naturally, markets given back a little bit here, needed a little bit of a rest after a big move off the low. So technically, from a technical analysis perspective, no damage has been done here. Markets tend to probe around levels. They could take a couple attempts to get through levels, but what we want to see is right now the level above us is 14.5 is resistance, right? The market is having trouble breaking through to the upside. At some point, we will break through and we will turn resistance into support, that being the new floor for the market. So let's talk about economic data. We did get a lot of it this week. First, on Tuesday morning, we got the consumer price index, right? They call it the CPI. Let me just get this ad out of here. The consumer price index, CPI, measures the rate of change on products that consumers are buying, right? Household goods, essential items, non-cyclical type of economic stuff. Now, we knew the number was going to be high. We've been hearing about this for quite some time. And just as an aside, CPI is one of the measures, the two main measures of inflation. So we were expecting the number to be high, but what we were looking for is a sign or signs that this number was starting to peak, was starting to plateau, and potentially rolling over. And we may have gotten that, right? It's going to take more than 1 month to confirm it, but we saw for the first time in the last year, the CPI, while it still came in high at 8.5%, it came in line with economists' expectations, not above, right? So really for the previous 11 months, we had come in above expectations over and over and over. This is a sign inflation may be starting to peak. And we're also drawing some clues from the used car market, right? Used autos make up 4% of total CPI, and used auto prices have fallen 2 months in a row at a greater rate than we've seen in the last 20 years. So again, they really shot up very high. There's a lot of room for them to fall, but hopefully that's a leading indicator to say that consumer prices may start to peak out, because if inflation peaks, the whole narrative around inflation and Fed tightening will start to reverse itself. Then this morning, we got the producer price index, right? So yesterday was CPI, today is PPI, right? Yesterday was looking at the goods and services that investors or consumers are buying. Today is looking at it from the wholesale side, the goods and services that producers are selling, looking at the prices on those. And again, expected a big number, got a big number, 11.2% year over year increase, but another report that came in not above expectations, but in line with expectations. So again, 1 month doesn't make a trend, but this is the start of what we want to see with inflation hopefully peaking. And if inflation peaks and comes back down, deflationary forces take over. The stock market is sure to like that. Let's take a look at our heat map today. Market's having a nice rally here today after a failed rally yesterday, right? We tried to rally yesterday morning on those CPI numbers, but just too many nervous sellers out there selling into the bounce, and markets were unable to hold the gain. So we try again today. We're seeing a pretty good broad rally across the board. You're seeing some good leadership in technology and consumer cyclicals. But again, we need to see some momentum building, right? And right now, going back to the market for a second, the market's kind of in no man's land, right? The lows are down here, the highs are up here. We're kind of meandering right in the middle. So what we're looking to do is see the market carve out a little support here, carve out a base, and move higher. And if we're able to do that, right? If we're able to do something like this where the market moves out of this range, what we would be looking at is a scenario where this low is actually higher than this low. We call it a higher low. It's a good thing. It means that the markets, the sellers, tried to push the market back down, but they were not successful in getting the market down nearly as far as they were last time. Buyers step in and we push this thing up higher. So that's what we're looking for. That's what we expect to see. Let's check in on investor sentiment, right? Fear and greed, 45, neutral. Investors are really not sure, right? And I think that lines up very well with the chart we just looked at. Markets are in the middle, kind of in no man's land between the highs and the lows. And guess what? So are investors, right? Not too high, not too optimistic, not too low, not too pessimistic. People just kind of taking a wait and see approach. So again, we know that this can be a little bit of a, kind of a tiring feeling here where markets go up and down and up and down. But the reality is, folks, we are working in the same range that we've been in for the last, call it 3+ months here. So while, again, the market has not run off to the races just yet, this is what bottoms look like. This is how you carve out a bottom. It's an activity, it's not a day, and we're working through that, and we think this good days for this market ahead. But investors just need to be patient and allow the market to come to them. So if you have any questions, reach out to us. Always here to talk to you about anything that's on your mind. We hope you have a great day and a great rest of the week, and we'll see you back on Friday for the Heritage Market Pulse.